This is Robert Kraft, and I'm your host on SNN.Network, and we're at the Sprott Natural Resource Symposium 2019 in Vancouver, BC. With me right now is Joe Mazumdar from Exploration Insights. Joe, welcome back. It's good to see you.
Thanks, Robert. Thanks for having me.
It's great to have you on. So it's been a couple years since we had you on. So let's do a quick recap as to your background. Who are you, and how'd you come to work at Exploration Insights?
Well, I guess I don't work there. I run it now. I was a geologist originally, much like Brent. Worked in Australia and South America. Then I went back to school, did an economics degree in Colorado, and I became corporate development market analyst and then an equity analyst up in Vancouver. And then I started doing Exploration Insights about several years ago.
So you are a speaker here at this conference. Let's get into it. What's your topic going to be for this event?
Well, Brent and I are doing a few different pieces, some about Q&A on people's favorite stock, and also I'll probably do a little presentation there just about the state of the state with respect to the market right now, probably with more of a focus on the gold sector, which is what most people want to hear about.
Let's get into it. What is the state of the state?
Well, earlier in this year, we had a lot of these Megamergers, and we talked about this off camera, is that most of the generalists that still like gold and like that diversification, exposure to precious metals have not been buying equity per se, but more so ETFs, whether they be gold ETFs or equity ETFs. And those generalists have basically been driving the market in terms of big stocks. But in order to compete with these ETFs, what we've seen is Megamergers in the first quarter and the latter part of last year with Barrick, Randgold, Newmont, Gold Corp. And that's trying to compete basically with these equity ETFs, show that you have liquidity, show that you're solvent, you don't have to go back to the markets, and also potentially issuing a dividend, which these ETFs don't do. So this is really the investor's ear you want to get a hold of. Because again, there is no lack of interest in the gold sector. It's just a different way of playing it, especially with the big money.
Were there any other trends that you've been seeing going on in, let's say, the last 6 months?
Well, out of that trend of the mega mergers has spawned all these divestitures. And so because of these mega mergers, we've had bigger combined balance sheets with a lot more long-term debt. And so basically these companies are saying we're going to divest $1 billion, $1.5 billion worth of assets. And that's basically coming onto the market over the last 6 months and probably will be an issue in the next 18. So that has a knock-on impact with potentially junior developers that have single assets and are trying to maybe vend it to a major producer, because most of these mid-tiers and majors are now going to be looking at what's coming out from these divestitures first, because they could be operating assets, fully permitted, in a good jurisdiction. So we're going to have a bit more competition on the M&A side with these assets, especially in the gold sector.
So what would you say is then the result of some of these trends that you've been seeing happening? You know, what could this lead to in terms of the mega mergers and also the divestitures?
Well, what we've seen already is, the lack of, because where the gold sector was, it was flat to trading sideways at about 13, not a lot of cash flow being generated by these companies. Not a lot of companies were actually interested in acquiring. Most of what they were doing was nibbling at strategic investments in explorers because they weren't doing any exploration. But what we've seen is the Australians, because the gold price in Australia and the local currency is basically hitting records. It's over $2,000 locally. And so they have been able to generate free cash flow. They've been able to grow. Their share price has done well. And so they see a limited universe now in Asia, because now they're looking at the Philippines, geopolitical security issues, Indonesia, Papua New Guinea, and now they're saying, well, why don't we look at the Americas again? It's not like they haven't done it before, but now there seems to be a stronger commitment to do it with M&A, acquisitions, strategic financings with big companies like Newcrest. We've seen Northern Star. Recently we saw St. Barbara buy Atlantic Gold. So we're seeing that filling the space right now in terms of M&A.
So you've been through a couple, bull bear market cycles. What are some of the characteristics from what you've seen previously and compare it to where we're at currently in the cycle?
Well, I'd say, last year when I did this panel and I was talking with private equity, I was talking to institutional equity that also had exposure to gold ETFs and passive funds. and to a Sprott executive who does retail. The issues were that the retail sector was strong, especially based out of the U.S. They loved gold, but they're geopolitically a bit myopic. They would tend to like the Americas, certain countries, and they'd be fine with that, and dual listing all the better. On the private equity side, they could take a longer term view, 5 years plus potentially, and pick their commodities, the battery metals, potentially gold, that sort of thing. And then you have the institutional equity that's having a bit of a hard time of it because they're not seeing inflows of capital. And their issue is that, there's money coming in, but it's not coming to us. It's going to the ETF. It's not from a lack of interest in the sector, but they're just playing it differently. And so it's hard to compare this cycle to a past cycle is because we haven't seen the GDX and the GDXJ and other ETFs at this sort of level in other cycles. And we haven't seen the generalist interest in those because we've had obviously a lot of collapses in equities. Big companies, long-term debt issues, operational issues, and so those people don't want that. So they'd rather play the sector where they don't have that specific company risk.
So then, what do you see then? I'm not asking you to be an oracle or anything like that, but what are you seeing now for, let's say, the next 6 months to a year in terms of the natural resources space?
Well, the advantage, like we've seen, and we know that on the TSX Venture, where a lot of these junior companies that are non-cash flowing are listed, there's still way too many. I was hoping that over the last 2 years when we had a paucity of financing, that some of these would be actually drained of their lifeblood. And so we could shrink the sector and have more quality companies with quality management doing the right thing and competing for capital. The good and the bad of what's happened with the gold price recently, with real interest rates coming down and gold price shooting up, and also silver, is that we've seen like about $500 million of equity financing, basically pumping money back into some of these companies that are very marginal, but would give you the biggest return on the gold price because they're highly levered to the gold price. So we're seeing a lot more of that funding right now, and we'll see more drilling, we'll see more marginal assets being drilled. So that's a concern to me, that there's a little bit too much interest in companies that really shouldn't have that interest. I was hoping that it might happen for longer, but that's not the case. So in the gold sector, when alternative financing over the last 2 or 3 years had an advantage because the financing sector from equity was non-existent, they will probably feel the pinch of not being able to get those royalties or those streams off some of these non-cash flowing producers because they can actually go to the market now.
So I'm going to ask you a question that I actually never asked either you or Brent. What's the number one question that you're getting from your subscribers about the natural resources space, and then how would you answer it?
Well, I guess what we see is a lot more interest in individual companies. Like in terms of our discussion forum that we've got on our website, people would ask us about any company because we've seen so many equity financings. They're considering the equity finance because is there a fatal flaw with this company? Or hey, look at Eric Sprott. He's doing so many financings. What do you think about this company? But out of the, I don't know, it's like 60 odd financings that I've sort of detailed, 20% almost of them, Eric Sprott's taken a bit of interest in. And so he's a big believer in the silver and the gold market. And so everyone's asking us about, well, what's your take on this? It's not a very sector-specific opinion, like what do you think about copper, what do you think about lithium, what do you think about... It's more like, what do you think of this specific company? If I do this private placement, is there a fatal flaw that I'm missing? And that's really what the letter's about, is trying to get to know quick and trying to find if there's a fatal flaw. It doesn't mean that the equity price doesn't go up. It just means in the long term, you got to know that it might come crashing down later.
All right, Joe, where can our audience go and find more information about you and Exploration Insights?
So it's explorationinsights.com. And if you want to subscribe, there's a subscribe button. But if you want to just get a lot of free information, there's a lot of free information on our website as well.
My name is Robert Kraft, and I'm your host on SNN.Network, and we're at the Sprott Natural Resource Symposium 2019 in Vancouver, BC. With me again has been Joe Mazumdar from Exploration Insights. Joe, always a pleasure, man.
Great. Thank you very much.